Hello there and welcome to episode 10 of Mortgages Made Easy. This one is called Remortgages and Product Transfers. As usual, just like to thank everybody for liking and sharing the videos, also for recommending me as well. There was a Facebook post went out this week, someone asked for a recommendation for a mortgage advisor and literally 10 people recommended me and the guy got to contact me for an appointment. So I can't thank you enough for that to help me develop my business. So thank you very much. So we're talking about remortgages and product transfers. I think the easiest way to do this is start talking about remortgages, and then that'll naturally lead us in then to product transfers. So the purpose of Mortgages Made Easy, we'll just talk about remortgaging from a fixed rate mortgage. All right. So when you had your mortgage, you would have initially had a 2-year, 3-year, 5-year, 7-year fixed term period. When it's coming to the end of that fixed term period, probably around 3 or 4 months before, the lender will get in contact with you via letter and say, look, you're going to be going on the standard variable rate, and your mortgage broker, they'll be in touch with you as well, because they'll be thinking, oh, we've got to look after this. We don't want to go on the standard variable rate. Last week's example, I think the mortgage payment on the fictitious mortgage, which I'd done, was 595, and the standard variable rate was 749. So you don't want to go up on the standard variable rate. So in order to remortgage, you're going to have to send the mortgage broker the same details, the same paperwork that you did before. And you even might have to have probably another appointment as well. So you're thinking, oh no, hang on a minute, I've got to send the details. Oh, what a pain in the backside that is. I don't want to do that again. But I would urge you to do it, only because we could save you hundreds, if not thousands, by remortgaging you with a different lender rather than you just stay with the same lender. So for the sake of half an hour sorting your documents out and another hour with us, hour and a half out of your time, could save you hundreds or thousands, because then we can look across the whole of the market. So that's the reason why you would remortgage. You would remortgage to stop yourself going up on the standard variable rate. And that's where, and within it takes about 3 months to sort it, to give us a lot of time so we don't have any stress. Stop going up on the standard variable rate, and then we have a discussion then on how long the next fixed term would be. So why would you remortgage? What's going on when it comes around to remortgaging? Well, hopefully you have increased, your house has gone up in value and you've paid some of the mortgage off. So you've got more equity in the property, right? So you've made some money. Excellent news. Excuse the double thumbs up. Don't know why I've done that for. Ignore that. So you've got some equity in the property. Now, you can either remortgage like for like, go for a different product with a different lender and hopefully get a better rate and have a lower loan to value, right? Because you've made that money. Or you can maybe talk it through the mortgage broker and say, oh, look, we need a new kitchen. Can we remortgage and capital raise? So we can use some of that money that we've paid off, made, to have a new kitchen. Or we've got some debts, unfortunately. Can we debt consolidate a little bit? Or even if you've got quite a bit of equity, look, we're looking at getting another property. We want to buy to let. Can we remortgage this, take this bit out and put it down as a deposit for another property? Because your house is your home, but it's also the biggest financial investment you're going to make throughout your entire life. So you've got to make these things work for you. So the mortgage broker is there to discuss those options with you, see if they're viable, look across the whole of the market to get you the best deal. And that's if this bit has worked properly. Now, due to COVID, there's been a few changes in the market. Last year, when I was doing mortgages, I don't want to frighten no one, this is the reality. Last year when I was doing mortgages, 5% deposits, right? 5% deposit, first-time buyers, small deposit, 95% loan. Absolutely brilliant. Everyone was happy. People getting on the property ladder had a great. But now, if your house hasn't shot up in value and you haven't paid loads off in the last 2 years, just for example, you might not have enough equity to look across the whole of the market, or you can look across the whole of the market, but they might not have any products, because the lenders, the market's really turbulent at the moment. There's lenders coming in and out, high loan to values. They don't know what's going on in the future like the rest of us don't. So they're a little bit weary about small deposits, even when remortgaging. Now, therefore, you might have to look at staying with the same lender, right? This is called the product transfer. So if you can't remortgage, it's no drama. You don't go up on the standard variable rate. You do what's called a product transfer. These also come in handy for like people who were employed when I first done their mortgage. Let's use that example again 2 years ago. But now they've gone self-employed like 6 months ago, and we can't give any tax returns. And so they wouldn't really be able to remortgage because they can't show proof of income. So then we can product transfer you. So you go from the fixed rate with the original one, then we product transfer you, and you just go to another fixed rate with the same one. So say it's Principality, you just keep going with Principality, and it's seamless, and you keep going with Principality on another fixed term. Now, I just urge you not just to send this paperwork back to Principality in this case and say, yeah, we'll product transfer, because the mortgage advisor will know exactly what's going on with the market, exactly what's going on a day-to-day basis. So, like I said at the start, it could save you literally hundreds or thousands. So go back to your mortgage broker when you're going to remortgage, or when you, just when you're going to remortgage, leave it like that. Right, so what I'm thinking now is anybody who's remortgaging the next 12 months, sounds ridiculous, give me a ring. I will then put it in my diary to call you 3 months before the end of that fixed rate. 3 months gives us enough time to get the paperwork. It gives us enough time to look at the options, talk about the options, and go forward. If there are no options for remortgaging, then let me do the product transfer for you, because I can do it seamlessly, take all the weight off your hands, and you won't have to worry about it at all. But go back to your mortgage broker or come to me for advice with remortgaging, because you never know what you might be able to do. Fingers crossed, you might be able to get a new kitchen. You might be able to debt consolidate. You don't want to go up onto the SVR, and that's our job to make sure you don't. Like, we just want to keep our clients happy. If they're happy and you're happy, you stay with us, don't you? So it works well for everybody, really. So there we go. I look forward to hearing from you. Next 12 months, got a remortgage coming up. Drop me a message. I'll pop it in the diary. 3 or 4 months to go. We'll get cracking straight away. Look forward to hearing from you, reading your messages. Thanks for sharing. And the credit file check, have a go with that. It's in the comments. Free for a month, cancel at any time. As I said, hope you're well, and I'll speak to you soon. Thank you very much. Bye-bye.